Intel, a name that once dominated the tech world with its innovation, power, and reliability. For decades, Intel was the undisputed king of the semiconductor industry, its processors powering the majority of the world's computers. But today, the story is very different. Once a titan with a market cap of over $500 billion at its peak, now struggles to stay relevant. Its market capitalization has plummeted to around $130 billion as of late 2023. The company's stock, which once traded at over $60 per share, now hovers in the $30 range, showing negative the market's confidence. Rumors of Intel potentially selling parts of its business, or even the entire company, have been going around for a while, a far cry from its days of dominance. How did a company that was once the backbone of the digital revolution find itself in such a precarious position? To understand Intel's current struggles, we need to go back to its golden era. Intel was founded in 1968, and by the 1980s, it had established itself as a leader in the semiconductor industry. The company's x86 architecture became the standard for personal computers, and its partnership with Microsoft in the 1990s solidified its dominance. The Wintel duo, Windows running on Intel chips, became the backbone of the PC revolution. Intel's processors were everywhere, from home computers to enterprise servers, and the company's marketing campaigns, like the iconic Intel Inside slogan, made it a household name. Intel's success was built on a few key factors. First, its manufacturing prowess was unmatched. The company invested heavily in cutting-edge fabrication plants, or fabs, which allowed it to produce chips that were faster, smaller, and more efficient than its competitors. Second, Intel had a culture of relentless innovation. Moore's Law, named after Intel co-founder Gordon Moore, predicted that the number of transistors on a chip would double every 2 years, and Intel lived by this mantra. Year after year, Intel delivered new processors that pushed the boundaries of performance. By the early 2000s, Intel was at the top of its game. It had virtually no competition in the PC and server markets, and its profits were soaring. But as the saying goes, the higher you climb, the harder you fall. And fall, Intel did. So, what caused the downfall of Intel? Intel's decline wasn't sudden. It was a slow erosion of its dominance over the years. Several factors contributed to this downfall, and many of them were self-inflicted. Intel's biggest mistake was complacency. For years, the company enjoyed a near monopoly in the PC and server markets, and this led to a lack of urgency to innovate. While Intel was busy milking its cash cow, the tech world was evolving rapidly. One of the most significant shifts was the rise of mobile computing. In the late 2000s, smartphones began to take over, and Intel completely missed the boat. When Apple launched the iPhone in 2007, it marked the beginning of a new era. Smartphones became the primary computing device for billions of people, and the demand for mobile chips skyrocketed. Companies like Qualcomm and ARM capitalized on this trend, designing energy-efficient processors that were perfect for mobile devices. Intel, on the other hand, was stuck in its PC-centric mindset. The company tried to enter the mobile market with its Atom processors, but it was too little, too late. Intel's chips were power-hungry and couldn't compete with ARM-based designs. By the time Intel realized its mistake, the mobile market was already dominated by others. Another missed opportunity was the gaming industry. As gaming became a mainstream form of entertainment, companies like NVIDIA and AMD seized the opportunity to develop high-performance GPUs. Intel, once again, was slow to react. While NVIDIA and AMD were pushing the boundaries of graphics technology, Intel remained focused on CPUs. Similarly, the rise of cryptocurrency mining created a massive demand for GPUs, and Intel failed to capitalize on this trend. Artificial intelligence is the next big frontier in tech, and once again, Intel is playing catch-up. Companies like NVIDIA have established themselves as leaders in AI hardware, thanks to their powerful GPUs and specialized AI chips. Intel has made some efforts in this space, such as its acquisition of Habana Labs and the development of its own AI accelerators, but it's still far behind the competition. Apart from missed opportunities, Intel's manufacturing advantage, once its greatest strength, became a liability. The company struggled to transition to smaller transistor sizes, a process known as a node shrink. While competitors like TSMC and Samsung were rolling out 7nm and 5nm chips, Intel was stuck at 14nm and 10nm. This delay not only hurt Intel's performance, but also damaged its reputation as a technology leader. Today, Intel is a company in transition. Its dominance in the PC and server markets has eroded, and it faces fierce competition from AMD, NVIDIA, and ARM-based chip designers. AMD, in particular, has been eating into Intel's market share with its Ryzen processors, which offer better performance and value. In the server market, cloud providers like Amazon, Google, and Microsoft are designing their own ARM-based chips, further reducing their reliance on Intel. Intel's financials reflect this struggle. Revenue growth has been stagnant, and profits have declined. The company has also been losing talent, with many engineers and executives leaving for competitors or startups. To make matters worse, Intel's debt has been rising as it invests heavily in new fabs and R&D. But it's not all doom and gloom. Intel still has a few aces up its sleeve. The company remains a major player in the PC and server markets, and its brand recognition is still strong. Intel also has a vast portfolio of patents and a deep well of engineering talent. The question is whether it can leverage these assets to stage a comeback. The road to recovery won't be easy, but Intel is making some bold moves to turn things around. The company's new CEO, Pat Gelsinger, who took over in early 2021, has brought a renewed sense of urgency and vision. Gelsinger is an Intel veteran who understands the company's strengths and weaknesses, and he's not afraid to take risks. One of Gelsinger's top priorities is to regain Intel's manufacturing edge. The company is investing $20 billion to build 2 new fabs in Arizona, with plans to expand further in the US and Europe. Intel is also re-entering the foundry business, offering to manufacture chips for other companies. This is a risky move, as it puts Intel in direct competition with TSMC and Samsung, but it could pay off if Intel can deliver cutting-edge technology. Intel is also doubling down on AI and GPU development. The company's upcoming Ponte Vecchio GPU is aimed at the high-performance computing market, and Intel is working on new AI accelerators to compete with NVIDIA and AMD. These efforts are still in the early stages, but they show that Intel is serious about reclaiming its position as a technology leader. Under Gelsinger's leadership, Intel has been forging new partnerships and making strategic acquisitions. The company has teamed up with IBM to develop next-generation chip technologies, and it's working with Microsoft to optimize Windows for Intel's new processors. Intel has also acquired companies like Tower Semiconductor to strengthen its position in the foundry market. Perhaps the most important change is the cultural shift within Intel. Gelsinger has been vocal about the need for Intel to be more agile and innovative. He's encouraging employees to take risks and think outside the box, in contrast to the conservative culture that plagued Intel in the past. It is a do-or-die era for Intel. Only the future will tell the outcome. What do you think about this situation? Comment. If you like this video, don't forget to like, share, and subscribe to the channel. Also watch this next video popping on the screen.